Everybody, thanks so much for joining us today. We are joined by Nachman, the founder of ConnectBooks, which is a platform that transforms how e-commerce sellers and accountants can manage that financial data that comes across from your Amazon channel, Shopify, TikTok, and many more. So I'm excited to kind of just dive into the journey of how he started this tool, and just his background of being in the accounting world has made this tool probably a little bit more robust than what you see from other solutions out there. So thanks so much for coming on today and talking about your software.
Thank you so much. Thanks, Christy. Thanks for having me. I'm excited to join and come on here and share information.
Yeah. So I think if you want to just give me a little bit of background on how you got into the industry you did, and then how that came to be while you started ConnectBooks.
Yeah, sure. It's been quite like a wild ride. As I say, business is always like a roller coaster. You get your ups and downs. So for around like I think it was like probably around 14 years, no, probably like 13 years ago is when I decided to get into the accounting space. I was looking to do something meaningful and something that I would enjoy. I was looking for something good. So I dived into the accounting space. I got a master's degree in accounting, and I landed a job as I started off as the bookkeeper of the company, and then transitioned up all the way to becoming the CFO. So I ran the accounting department for like around 4 to 5 years. Under me was like accounts receivable, accounts payable, and receiving, shipping, all that. And I had a lot of fun there in terms of like understanding the accounting from a very deep level, understanding the inventory. We had over 200,000 different SKUs, and reporting, getting accurate financial reports monthly, and that was a very big challenge due to the softwares they were using. And there was also no training, no nothing. Like it was like a pretty complicated ERP, and I'm very tech savvy, so I enjoy playing around with it, and I figured out how to run the proper reports and had to do a bunch of pivot tables, summit, VLOOKUPs. That's where I learned all the good stuff, and how to put together reports. So fast forward, working there for 5 years, I decided to move on. I want to do something more on my own. I did try to work for a lot of local CPAs, and I was not looking to go to corporate. I wanted to rather find like a local firm, and most of them, didn't want to hire me. Like one guy went for the interview. He's like, middle of the interview, "Are you going to open your own firm?" I'm like, "Probably one day." So he's like, "Okay, so leave." So like, so I was like stuck a little bit where I was trying to find a job, and CPAs didn't want to hire me because they saw me as a threat. One guy tells me, "You're gonna have to take a pay cut." I said, "I'm ready to take a pay cut," because I was just looking to learn the industry and get more familiar with taxes, because usually local firms are more focused on taxes. Usually the big firms will be more on audit. So I had a very strong finance background, but not a tax background. So after like a half year of not landing any jobs, I decided to open a bookkeeping company on my own. So I figured I'll do bookkeeping for small to medium sized businesses. And the eventual goal was to turn that into a CPA firm. However, things went differently. So like 6 to 8 months into my bookkeeping firm, I started working with the Amazon sellers. Now, when I started working with Amazon sellers, like, I remember the first client came to me with like nothing. He's like, a private label seller, so it means he had a private brand, and he wants to take this, and he's buying out his partner, but his partner is not a partner in the whole Amazon business. So with a private label brand, means say each product, usually you would not sell too many, but you bring in a lot of products from like overseas, like China. So they had like 15 different SKUs that they were importing, and the partner, let's say partner A only had like 5 SKUs that he was a partner with. The other 10, partner B owned himself. So when partner B wanted to do the buyout of partner A, they needed to have profitability analysis on a SKU level, but down to every penny. It wasn't just like a plain estimate, because they wanted to do proper due diligence, and he wanted to also perform a proper buyout and do an evaluation, but only of those 5 SKUs that partner A had a partnership in. So that's where I started my game, and that's where I got like very into it. Then I was looking to expand my bookkeeping company, and I was trying to think of different ideas how I can approach the industry. I probably spent like $25,000 on advertising, which I learned afterwards the hard way in the accounting industry. Um, the people will connect to accountants and bookkeepers based on trust than actually based on advertising. So that part, it's in accounting, it's really hard to take like a shortcut. Like, business, if you launch a product, maybe you go on TikTok, you go viral, you can sell out. With
Yeah.
accounting, it's hard. You're like this nerdy accountant, and everybody has to like
They
get
gotta
to know you.
feel you out first and make sure they can
Yeah,
trust you. Yeah.
it's hard. So, realizing that aspect in the accounting industry, um, I was like, okay, so how can I really expand? Now, when I was working with the Amazon seller, after spending like a half a year putting together a bunch of data models and getting all the data massaged and sorted out and getting it into QuickBooks, I was like, what if I can just do what I did to this guy for a bunch of other people and just like streamline it, automate it, and if I can automate it, I'll get faster turnaround and I can give better pricing. So I spoke to a friend of mine he had a shop where he was doing custom software, and I asked him if he would be able to do something like this, and he's like, yeah. So that's really where the idea came out, and so that's when we started ConnectBooks, and then I started pitching it to other sellers, and they're like, look, we have an in-house bookkeeper, or we're using a different bookkeeper that we have a good relationship, but your tool really sounds awesome. So what we did is we took our company, split it into two, and we run the software today, completely independent. We still run our bookkeeping firm, and you can eat. So for the people who just have an in-house bookkeeper or have a different bookkeeping firm, they would just sign up for the software and they would just use it. And it's a little interesting because in the beginning, mainly I was very focused on my bookkeeping, and then I started the software, as a side part. And afterwards, like a few years later, the software started feeding a lot of bookkeeping business to the bookkeeping company. So, like for example, people like call up like, "Oh, I don't know what's going on," or something like that, and like, "Oh, you guys do bookkeeping? Why didn't you just do everything for us?" So, that was like a very different shift in my bookkeeping company. And the reason why I still like it a lot is is because when our software, when we develop features, we're developing it based on how our bookkeeping company uses it. So when I talk to a bookkeeper and a bookkeeper tells me, like, I have this and this challenge, where I'm like, why don't you just do it this way, or why don't you structure like this? Like, a lot of softwares out there is like where you have like the developers who come up with this great idea, and they think, oh wow, this is going to change the industry, and it gets very hard because the software owners are very detached from the software. They're like not really understanding the day-to-day grind in the software, what pain the users really have. Meaning they can listen to it, but not always do they really feel it on such a strong level. Versus by us, our bookkeeping company is like the biggest client of ConnectBooks. We use it day in, day out. Every single feature gets first beta tested with our clients, and I'm hands-on in it, making sure that it works the right way, making sure the numbers are accurate, not just promising. There's a certain feature that I built, which after, like, for example, a certain reconciliation that we reconcile lost inventory by Amazon, and we realized a lot of issues with it because I was utilizing it myself for my client, and then I was like, no, this doesn't make sense. I can't give them these numbers. I have to tweak it. I got to change it. So I right away implemented 4 new features to that feature, to enhance it and make it better. So I think that's a very strong point. The fact that we actually run our own bookkeeping. And I just do want to say on the side, we're not a threat to other bookkeepers because our bookkeeping practice is very small. We try to keep it very niched and small. We have like 50 clients in it, more high end, and we're not looking to grow it to who knows what. It's just as it is pretty tough. So with the service-based business and product-based business is very, very different.
Yeah.
So, but I like a lot is that I'm in the loop, and I'm still like running the grind for my accounting business all day. So, and that's how when it comes to any bookkeeping practices or stuff like that, um, we are able to help out. We're able to understand the problem, and we usually will like have a back and forth with the bookkeeper and say like, yeah, like, doesn't make sense. Okay, fine, we can do it. But I would say for most of the times we pretty much have a very strong grip on how we do accounting practices.
Yeah. And I think that's one thing that I do really like about your software is to the point of you're designing it with the bookkeeper or the accountant in mind, where other solutions, and I would say even QuickBooks recently, they changed their whole interface. And probably from an IT perspective, they're like, hey, this is great. And all of us that use it on a daily basis are fantastic. Now I got to click 3 or 4 more times to go do what I need to do. And we are kind of detached from how all of that works. I just need the software to do what I want it to do.
Right. No, it's we even once had that we changed like a certain page that we updated. We made a whole new version, and people were really upset. So the way we were able to track it is we were able to see how many people are going to the old page, how many people are staying on the new page, and maybe a few people use the new page. And I was like trying to understand. Well, I'm giving you so much more on the new page, but then we actually called up a few bookkeepers and like, look, we like to hit space. We like to hit the next button. We don't like moving the mouse too much. So we took our existing page, built in all those, meaning our new page, built in all the existing functionalities of the previous page, and from there on it was all good.
Yeah. And then everybody's happy again and they get out of it what they want.
Right. No,
Yeah.
it's super important. I hate it. I know even like with payroll, like like when you get used to a certain payroll provider, you don't even want to switch.
Mm-mm.
Once it runs, once it works well, like I'm busy. Let me just get my reports out this month. I'll talk to you next month.
Yep.
Maybe next month will be a little quiet, and the next month to get bombed with another few stuff. And before
Yeah,
you know it, it's
too much pain. Yeah. So with how your solution has evolved, I know you've recently added some newer things in there with the inventory management and things like that. Can you speak to kind of how that came about, especially because Amazon and Shopify, they do have some of their own inventory tracking, but I think what's unique about what you have is it's all in one place and it's easy to see. The dashboards are easy to read.
Yeah, so the way I evolved was my first thing as a bookkeeper was first to create a set of books. So first thing is, the most important part of bookkeeping is reconciliation. I mean, it's the boring part, but the most important part. If the accounts are not reconciled, I'll never produce reports otherwise. So first thing is we'll reconcile the book. So first thing I do in ConnectBooks is pull the data from Amazon and get into QuickBooks just to reconcile the settlements, record the sales, the fees accurately. So our first step was let's create a set of books. Once we had our set of books created, now my niche in accounting is different than is a lot about clarity. I sometimes there's certain accountants that don't really care too much about the books. All they want to do is just like do some mumble jungle and they say garbage in, garbage out, and then as long as they can file a tax return, they're happy. We're usually not from that angle. We're from the angle where we really want to get into the weeds and really understand, what's happening. So when you want to start, so after you produce a P&L balance sheet, the client tells me, okay, so now you're showing me that I didn't make money last month. Can you tell me why? So I told him, well, these certain products are not making money. So he's like, can you tell me which one? I'm like, I don't know.
Yeah.
So that's when we had to develop our profitability by item on ConnectBooks. So once we developed our profitability by item on ConnectBooks, that's where when a client, I would give a P&L and the client would say, can you tell me which products are not working well? I would say, okay, let's go to our profitability reports in the website and let's go through the items and let's filter it. Anything, with the profit margins, let's say below 10% or below 5% or is losing money. And with the click of a button, we would have all that right there. And one thing I just want to highlight is that when it comes to e-commerce, there's a lot of different dates on a transaction. Let's say with Amazon, it's something called now deferred payments, which is very important because an order can come in January 1st. Amazon will ship it out, let's say within 2 days, January 3rd, but Amazon won't pay the vendor up to like January 10th or 11th. So what happens is you have a big gap, and a lot of reporting tools, when they run their data analysis, they run it based on the date the order came in because they always want to show that. But when you post it to QuickBooks, you post it based on the day you got paid, which is the settlement date. So if your books and the reporting are not talking the same language, then you have a huge gap, and a lot of times that's a very big issue for me. When I see a P&L in QuickBooks $1 million, I want to see the same thing on the dashboard. I want to see the exact same number because otherwise I'm like busy reconciling. So for me, that was another big, very pain point that none of the dashboards out to do it based on the accounting side besides us. So our analytics will always match QuickBooks, and we also have the analytics match back Amazon. We can run it both ways. So like if a guy says, hey, your data is not accurate, so let's switch the date. Now it matches Amazon, boom. Okay, but now let's go back to the accounting date because we're doing accounting now. So we so our first goal was to give insights on the P&L. That was our first goal, which we'd done a couple of years ago, built up beautiful different reports. We have comparison reports different type of reporting, and where we get very granular into the detail, and we're able to drill down on a SKU level to understand the profitability. Then after that was done, I faced a different issue. So this is my common scenario where I had a client that did $22 million in sales. And this is where I say I like my bookkeeping client, because this is a bookkeeping client. And with the bookkeeping, a lot of times I also get involved in like CFO style work. So we finished the P&L, $22 million in sales. We recorded cost of goods sold, payroll, all the expenses. At the end of the day, the net income on the P&L was 1.4 million, and the client had no cash in the bank. And they were like coming to me like, look, we made $1 million. Why are we struggling? And I was really like trying to understand. So first thing I did is I did a balance sheet comparison, and which is technically a cash flow statement. Mm-hmm. And I saw that in the beginning of the year, inventory was 3 million, and at the end of the year, inventory was 6 million. So I told them, look, you bought $3 million more inventory than you actually sold throughout the whole year. So I said, your 1.5 million of profit went straight back to inventory. Plus, you also increased liabilities throughout the year of $1.5 million. So that's the plug. So they're like, next step was, so can you tell me which product? And I was like, no. So that was very, very challenging. And the problem was, even in QuickBooks Desktop, where we itemize the inventory, they don't have an age. Now, I do know that QuickBooks Desktop Enterprise does have the ability to run inventory age and does have the inventory to run a FIFO. But I have news for you that it doesn't work.
Yeah, exactly. That's what I tell people all the time. I'm like, don't go down that route.
No, I literally had a client. See, I had a client that they had like 10 different channels that they were selling on Amazon and a bunch of different places. We combined everything for them into QuickBooks Desktop, and I probably spent like 4 months of work. And we set up like 20 different warehouses, calculating in transit, calculating sales and everything. And then we had a lot of questions, and I was relying to have the FIFO in there to give me the answers. And when I turned off the FIFO, I got one number, which made sense, how much inventory was on hand. But when I turned on the FIFO, the whole thing went complete whack. It was too big for it to handle with too much. And the file was very not big. I know QuickBooks Desktop can bust when you get the file very big. I tried to keep it the file was under 400 megabytes. So that's not really that long. I mean, it's not small, but I've worked with files that are over 2 gigabytes. A Desktop was under 400 megabytes, and the inventory age was just not working. So, and after 4 to 5 months of work, I basically had to tell my client, okay, we're going to start again. So at that point, we had to do some price adjustment. They were pretty upset at me, but we were able to deliver pretty fast. We used a different inventory tool at that point to help us, get stuff in order and, figure it out. So after that, I was facing these issues where I basically, finished reporting, but I had no clarity into the inventory. And for me, the important part was the inventory age. It's funny because when you look at a balance sheet, like if you go to a bank for a loan, they'll say, send me a balance sheet, send me an AR aging and an AP aging. Why? Because they want to see the health of the AR. They want to see, they're not going to lend you money if you have, receivables 90 plus days past due. They'll lend you 30, 60 most. Nobody goes more than 60. So my always question is, why does nobody ask for an inventory age? And I decided the answer is that most softwares can't do it. So that's probably why they don't ask for it. They want to lend money. They're going to wait for that.
Yeah.
So for me, the inventory age was a very big component. So what we did is there's two aspects with e-commerce, there's two aspects that you need. Number one, the first thing is the numbers have to be accurate. So with e-commerce, I found it very confusing to have accurate numbers without multiple warehouses. So multiple warehouses doesn't work in desktop either.
No, it doesn't.
Yeah, because you have to, when it comes to Amazon, you have to do so many transfers. So let's say, for example, somebody sends out 1,000 units. So let's say the same product of a widget A to Amazon. What they will do is so you'll have the first initial. So usually what I do these days, I set up 3 warehouses, like a local warehouse, an in-transit warehouse, and then an FBA warehouse. So the first transfer from local to in-transit will be like one big transfer. Then Amazon can receive it over 3 months. They can receive today 20 units, tomorrow 50, tomorrow 150. So when you want to first thing before you start running an inventory age, you want to first make sure these numbers are accurate. So when you want to make sure these numbers are accurate, you need to have multiple warehouses, because I myself have tried many times doing this, where we pulled inventory from the 3PL, then we pulled inventory what was in FBA. The problem was we never knew what's in the way, what's on the way to Amazon. And there's no report that's going to give it to you because it's still on the way. Amazon might, meaning there's certain reports that you can tell what might go out there, but I haven't found any good reporting in that. And in any time, let's say you're dealing with a supplier that's, even if you're just a Shopify website, if you're dealing with a supplier that's sending out inventory from the supplier to the 3PL and it wasn't received yet, it's also confusing. Like, you want to be able to differentiate what is not received, what is received. So first thing we had a very hard time was accuracy, like getting really accurate on the inventory numbers, drilling down. So that we accomplished by having multiple warehouses. And then we also built out automation where ConnectBooks actually does the transfers for you. We automatically transfer from your local warehouse to an in-transit and from in-transit to FBA. Then we do also even more, is we have an FBA reconciliation where we can reconcile your FBA warehouse for you and do all the inventory adjustments. And then we also have the in-transit, we reconcile that for you as well. So we basically remove a lot of burden of manual work that you would need to do, and we just completely automate. So all it's left for you to do is reconcile the local warehouse, which could be very straightforward.
Yeah, and a huge time savings too. And I think a lot of the ways that you've taken out a lot of the errors that can happen, and then you can track to make sure, hey, did things get lost along the way? Because I've had notorious stories from my clients. I'm sure you've had it from yours too. Hey, Amazon has no idea where our inventory is, and they're looking for it, and all of a sudden a month or two later, hey, we found all of your items. We don't know where they were, but we found them all of a sudden.
Right.
And
like mysterious.
Yes. And I was like, hey, were you trying to fire sell them and see what happens and then let me know if it's a good product? Like, Amazon, they're a funny company. But I have had that, and clients that can prove when they sold things and show the dates and whatnot. It's been a little bit easier to track it down versus I've had clients that, I had one particular, it was 4 months before they could find inventory.
Wow.
Yeah. And then you think of the monies that, they can't get paid because they don't know where their inventory is. Yeah.
It's very very, very challenging. It gets also even more challenging because a lot of times we have seen other softwares do like inventory adjustments when it's not necessary.
Yep.
And then, one thing I also don't like about an inventory adjustment, it ruins the cost of goods sold, because, the neatest way is to have a bill. The bill gives you, what the purchase price was. Now, one of the things we do is we run on FIFO. The reason why we run on FIFO is because we want inventory age. So if you do an inventory adjustment, that recalculates the age. So then you lose the whole. Then you lose the whole. You lose the whole train. So besides getting the inventory 100% accurate, the next thing really what our inventory feature serves for is giving an inventory age. So when I give a client like monthly financials, my goal is I give you a P&L balance sheet directly from QuickBooks, and then I will give you along the profitability by SKU from ConnectBooks, and then along that I'll give you the inventory age from ConnectBooks. And then what we're working on now is like inventory turnover ratios and demand forecasting, where we'll be able to tell a client, okay, based on your sales data, this is what we want. This is how much you should be forecasting. You just tell us how much stock you want to have. Like, you tell us, do you want to have 30 days, 60 days of stock? And, based on that, we'll help you implement, how you should, reorder and stuff like that. Now, I take a very different approach than, where certain softwares, because a lot of softwares are more based operational. We're more from the accounting side. So like in my previous company, like where we worked, we had 200,000 SKUs. Inventory is a challenge for everybody. But for me, I want to understand from a cash flow perspective, like, okay, so number one, how much inventory are you going to need? Like, are you buying more than you're supposed to? Are you buying less than you're supposed to? Right? So if you want to manage cash flow, first thing is understanding the biggest expense in the business is inventory. And the problem with inventory is that all business owners like put it aside, because, like I always make fun of it. Like when somebody wants to hire us as a bookkeeping company, they try to negotiate on the price, right? Everybody likes to negotiate. When they want to buy inventory, what do they think? They don't think about negotiating. They think, okay, this cost me 100, I'm selling it for 200, fine, so I'm going to make money. But if you don't sell it, you lost the whole money. But they don't look at it that way. So what I try to do is say, okay, you want help on cash flow? Number one, let's understand your inventory. okay, so if you have, let's say, this amount of inventory, let's now compare it to the average cost of goods sold for the last 6 months. You shouldn't be carrying more than X amount, per 2 months or 3 months. And then I want you also to go over the inventory age and see why certain items are here more than a certain amount of days, and just replenish the SKUs that are selling, and try to like figure that part out. That part usually gives us a very strong edge in terms of cash flow management. So the balance sheet is more cash flow, P&L is more profitability, and from this angle, by us diving into the inventory, we're we're able to give analysis to the client from a cash flow perspective, which is, I think for an accounting, if you can like really advise a client, number one on profitability, number two on cash flow, that's really
Yeah.
powerful.
And I think too, with all of the inventory, how many clients, they don't ever make any items obsolete anymore, even if they're not churning a profit, because it's one of those, well, there might be that one customer that needs it, and we're holding out for that one customer that might need to buy these couple of products, and we only make, $1,000 a year off of it, instead of just turning that one completely off and putting time and energy into the products that do sell.
Yeah, no, that's a very big challenge. So what I would do in that case is, like with accounts receivable, there's a method called allowance for doubtful accounts. Like, so I try to adopt that for inventory as well. I'll say, look, anything above 60 days, I'm writing it off. On the balance sheet, you're not going to see it. You want to leave it in ConnectBooks, no problem. Just leave it. I'm just letting you know that this we're taking off your financials. And if it makes you show a loss, they say numbers don't lie. The last thing I want to do, and I always tell all my employees, the last thing we want to do is tell a person they made money when
Yeah.
it's really not true. Because then all of a sudden they start spending, and they start this and they start that, and before you know it, there's no more cash left, there's nothing left, and then they just get upset at us. So for us to have the accurate picture is good, is the most important part. To deliver the news to the client is probably the hardest thing, but sometimes it's just the way you got to do
It
it.
is. And I think just adopting some of those processes within the company helps, because to your point, a lot of these are more the startup type of e-commerce businesses, or they're growing so rapidly they can't keep up with ways of how to manage their inventory the best way they can. And I think one of the questions that came in was, what are some of the best practices for businesses looking to create consistent and accurate inventory reports across those e-commerce platforms? And I think a lot of it is what your software could then help by pulling the data in from that and showing them, this is actually what your inventory is doing. This is how quickly you're churning. This is what's not moving, and how we need to look into evaluating what maybe needs to be not an item sold anymore. Or if so, let's deplete our sources, run a sale on it, and get them off the books.
Yeah, no, that's definitely key, and that's really important to have the accuracy. The challenge that I find sometimes is that clients will also use different inventory platforms as well. Like, let's say, for example, we're not the greatest when it comes to shipping or fulfilling orders. We don't really have any features built around that. So usually what we do is that we explain to the client, and sometimes certain softwares might have good reports. There are softwares that have, let's say, inventory age, but very few of them, very, very few. But so I always explain to clients that, look, we might have to run both systems. You just keep running your warehouse the way you've been doing it. Like, I know certain people, like I once bumped into a program. They're like, every time we send a shipment into Amazon, we do an inventory adjustment. I say, why? Because it's out of our warehouse. I said, well, it's still on your books. You shouldn't be adjusting your inventory. The inventory is yours until you sell it. And as long as it doesn't ship from Amazon to the customer, that's considered yours. So a lot of times these inventory softwares, they're just trying to get a hang of it. And also I know a lot of inventory softwares have a lot of complexities when it comes to Amazon because of all these discrepancies. And we actually built a lot around that in order to handle it. So usually the best is to use a software like ConnectBooks that is built from an accounting standpoint, and it focuses on cash flow, and it focuses on getting a deeper understanding on the inventory more from a cash perspective than so much more from like what's in which bin and what's in the warehouse. And if the client really needs that, usually we would run both programs parallel. Like they would use that for their inventory, and we would use this more for the cash perspective. And we've also built a lot of features around it where you shouldn't have to be doing like duplicate work. Like, we have features where you can just import POs, and we have an AI that reads it. We even have a very cool feature where you can generate a PO in ConnectBooks, and our AI reader will match the bill towards the PO. Like it's not just automatic, and it will match and give you all the discrepancies. So we're trying to bring in stuff that will make the workload much easier. And one thing is, as like I said before, I myself use the AI. So if it doesn't work, then
Yeah.
I see that it doesn't work. I also built a feature that I can train it. So everybody has the ability. Like there's a button, like if it doesn't pick something up, there's a button called train AI. You have to train it like once or twice and boom, and then it just knows next time how to do it. Because if it doesn't, one thing I could say is that every feature in ConnectBooks gets used by my staff. And if we can't get it to use and it doesn't work for us, then we scrap it.
Yeah, which is good. Just a follow-up to this one too is one more. It's like, how do you see inventory reporting evolving in e-commerce, especially with the increasing number of sales channels and data sources businesses are managing?
So inventory is the number one expense you'll see on a P&L for any inventory-based business. And the challenge is getting that number right. These days, with the economy going up and down, and especially with the tariffs and whatever's happening, the challenge is that people are running razor thin margin these days, and getting that number makes a very big difference. So, for example, I'm working with a client that, let's say, they did approximately like, let's say, $1 million in sales. Okay, and let's say cost of goods sold was like around 800,000, and let's say their overhead was like around 180. So they're reporting like a $20,000 profit, and it's just because they're struggling these days. Now the challenge that I faced is that we were using a different inventory tool, is where when you, let's say, take a beginning balance plus purchases minus ending, we came up with 800,000 in cost of goods sold. And when we ran like a regular P&L based on the sales and returns, we came up with 725,000 in cost of goods sold. So that was very challenging. How come when we take ending numbers, we have $75,000 more in cost of goods sold? Now, on one end, I could have said the company made like really broke even. On one end, I could have said, no, maybe cost of goods sold is 725,000. So the company made like $100,000 profit. So that number has happened to me many times. And the bigger the company gets, the harder that customer is, because like a 5% discrepancy on, let's say, on 4 to 5 million is not, can sometimes be the profit margin of the company. So if you don't know that number 100% accurate, then it's really challenging, because it's hard to advise, because you're like trying to get the real number, but then you don't have the data behind it. So one of the things that we worked really hard is that besides us giving you besides our P&L, I mean, our P&L reconciles completely to the inventory, but let's say, for example, we haven't, if you, let's say, want to look at a particular product and you want to understand, why stuff are not doing well, we'll give you the full breakdown of how we got our numbers, which a lot of times
No, they
softwares
don't.
don't do. And sometimes you have to run through 6 different reports to put together back the picture. So there was an inventory adjustment here, there was a receiving here, there was a shipping here. There's a lot of different aspects happening to inventory. So what I've done is I combined it in one place. I give you one report, I give you everything, and then you can export it to Excel, do your pivot tables, you can filter it even in the software itself. You don't have to export it, and there's so much you can play around. And I find that whenever I'm facing a challenge with a tough like case, and I'm able to like onboard them on ConnectBooks inventory, it's like a game changer, because I just have all the numbers right there.
Well, I think you see that a lot with Shopify, even of having to pull so many reports to get an idea of what's really going on. And even though they have their summary report, there's still additional details that you need, and it's not in there.
Don't get me started about it.
And I love it too. I have clients that they get their 1099 at the end of the year from Shopify, and it will never match anything because, and I don't know
Yeah,
why they
never.
even do what they do, because when people are newer, it's very confusing because they assume, oh, my 1099 should match the cells that came in. And it's like, newsflash, it doesn't. Just kind of push it off to the side, and we got to rework and match all the numbers to get to this. And it's extremely time consuming and not a good use of time, really, for anybody.
Yeah, no, even in Shopify, like if you would run a sales report, like to take the sales, and then you would want to match back to the like items that ship. Let's say, for example, by gateway. So one of the ways we do it is we reconcile per gateway. So we'll get every order from Shopify. When the order comes into ConnectBooks, we'll assign it a gateway, and then we'll export it based on that gateway and based on that clearing account. So that's how you can have some sort of reconciliation. But let's say, for example, if you want to get that data point in Shopify,
No.
it's not there. And to do it manually, the software does it manually, order by order. But if you were to do it, you would have to export like 4 different reports, do a bunch of VLOOKUPs, a bunch of pivot tables, and it's just a nightmare when it comes to Shopify.
Yeah. And I always laugh about it because people complain about Amazon because it's terrible, but I think Shopify wins the award for what it doesn't do well yet.
Yeah. Well, Shopify is one thing. They can let you edit an existing order up to 60 days later. That's like,
It's terrible.
it's like, yeah, because you got to redo your
Yeah.
numbers afterwards. Like it gets very confusing when people do that. We have to build some workarounds around it, but usually we advise the clients like try to like keep some sort of practices in there. But it gets very very confusing. It gets even more confusing when people do wholesale retail
Yeah.
mixed with Shopify. We're actually building something on that. We should have a pretty coming up pretty soon because the way I like to do retail is just I don't like to bring in customer data. So I like to just bring in the sales like summarized per SKU, recorded correctly. But when it comes to wholesale, you want to carry proper receivables. You want to bring the customer into QuickBooks, the customer level information. You want to have the invoice, so you book the proper sale, and that's how when the check comes in the mail, you can just actually do a proper receive payment and apply it. So we're actually working on a feature now that we have an inventory module. We're able to segment the orders, and we're going to actually be segmenting the retail and wholesale, and that's how you can properly record accounts receivable versus the wholesale. But versus retail, you want to just summarize.
Yeah.
That's it.
Well, that kind of goes in with this question here, asking what are next steps or innovations that you have in the pipeline for ConnectBooks that you can share.
So, yeah, I mean, what we're working now is, I mean, we're really adding on a lot of features to our inventory module. The challenge is, for example, let's say one client needed something called vendor items, which one of the beauties I like about the ConnectBooks inventory is that we really listen to our customers. And for example, in QuickBooks, such a feature never existed and made it very complicated. So let's say, for example, if you buy a particular SKU, let's say from 3 different vendors, so every vendor has a different name for it, but really in your database, it's one product. So with QuickBooks, I I myself had that issue multiple times. So like you would try to use the NPN, like in desktop, you were able to use the NPN as like you could create POs based on NPN and enter bills based on NPN, but it was only one product. Also, if you want to do forecasting or stuff like that, there can be different lead times for different vendors. So one of the like that was like a feature that we had to build in where you can have one item in ConnectBooks. Now that item can be connected to multiple Shopify listings and multiple Amazon listings, meaning you can sell, let's say for example somebody buys 1,000 cans of Coke, he can sell it on Amazon a bunch of different variations. There's a 2-pack, a 4-pack, a 6-pack, an 8-pack. So we have all that configuration to link it back to one SKU. But then also a different thing is that you can buy the same thing from multiple different vendors. So that's just like one little example what we had to add on. We have like a list of over 100 feature requests. So we're kind of like trying to ramp it up and add as much as we can. What we do have is in our website, once you're a ConnectBooks client, there's something called a roadmap and feedback, where basically you suggest a feature that you want, and then based on what get the most votes, that's what we built. So we're definitely focusing a lot on streamlining inventory and definitely also working something on gaining more integrations and more to be able to serve more sites, but looking to do what our customers want and making sure that they're able to get enough value from the product that they give it over to their client the right way.
No, I think how would you say, I know there's a lot of ways that you guys are set apart from, I think a lot of people know A2X is probably one of your main competitors out there, and one that I had heard in the beginning until my CPA actually was the one that was like, hey, I think you should look at ConnectBooks, just because of the additional service offerings that you have. How do you guys kind of just how are you different? I think even more so from A2X than what you've already said of, more so that, you listen to what people want. You have the extra channels that you guys connect to, because I know like A2X, they're limited. They don't connect with TikTok. They are, Shopify, Walmart, Amazon, and that's really kind of their limitations, where you guys have more, and they don't do the inventory management or anything like that. Is that was that some of how you guys started to evolve, is looking at what the competitors do and seeing where those additional gaps are to make you guys further stand out?
So this question really goes back to when we started ConnectBooks 8 years ago. From day one, we were very, very different. And our client base is also different.
Yeah.
So my background is, I always ask somebody, what's the difference between the bookkeeper and the accountant? What's the difference between them? So I say the bookkeeper is there to answer the tough questions. The accountant is just there to file your return, and he says, I'll see you next year.
Mhm.
So sometimes you'll have certain accountants, maybe in the high-end space, where they'll like come into the business once a quarter, look over the books and try to give some analysis and make sure stuff are in place. But for the most of all, most accountants don't really get too much involved in the business throughout the year. And when it comes year end, all they want to do is file taxes. So a lot of times an accountant, when he wants to file the taxes, they need a proper set of books. So they have to start now getting messy and trying to load all the data from Amazon and the 1099 and all that. So they enjoy using a tool like A2X, which will fetch all the data from Amazon and just properly, journalize it for them so they can do it. Now, let's say, for example, where I faced challenges, and my first story was where partner A wanted to buy out to partner B, right? Our first challenge was getting proper SKU level profitability. Now, that's not something nearly close which A2X offers. So the way we always used to do it was we used to track inventory in QuickBooks. I was a big fan of QuickBooks Desktop and bringing in the sales. We didn't bring in every individual order. We would take the settlement report and summarize it per SKU. So if you sold from SKU on 100 units, it would just be one line in the invoice. Now, the benefit of utilizing QuickBooks Desktop over using, let's say, QBO or just doing journal entries, was that we were tracking inventory in QuickBooks. QuickBooks Desktop uses average cost, and the benefit was of having average cost of goods sold. So I, for example, had a story, and this is important. I had somebody approach me who was using A2X, and they were trying to sell their business, and cost of goods sold in QuickBooks was showing $1 million. Now they claimed, based on their spreadsheets, cost of goods sold was 900. So, and if you're looking, let's say, at a 4x multiple, that's $400,000 on the table. So they were ready to pay me $50,000, something like, get to the bottom of this and really help us, get our clear number. Now the challenge was, the way E2X works is that it's very simplified. So how do they calculate cost of goods sold? If you, let's say, have a product that costs $1, right? They tell you, take every product, just tell us what the cost is.
Mm-hmm.
Now, they have very limited functionality. What happens when the cost change? What happens when the cost goes up? Let's say 2025, there's a price increase. How do you record that? You can update the cost, but what happens with all the previous data? Then the next challenge was, what happens if you have previous stock at a different cost? If I buy 100 units and I don't sell out the whole 100 units, I buy more at a different cost. Now, you want to make it more complicated. What happens with landed cost? What happens with tariffs and all that? So they never had any great functionality around cost of goods sold tracking. And for me, that was number one. Number one was getting accurate cost of goods sold. I couldn't work on that end because there was too many fluctuating components. So the way we always like to do it is, we have a bookkeeper. The bookkeeper, let's say, gets all the bills from the vendor. So the bookkeeper has to do one function: take the bill, enter it properly in QuickBooks, and then properly connect it to the ConnectBooks SKU. So in that case, if QuickBooks is tracking inventory, then you don't have to keep track when the price goes up, when the price goes down, if the average cost of goods sold constantly changes in the right time, in the right format. So that was really our first, thing that the way we developed ConnectBooks was tracking inventory. Eventually, we involved in tracking our own inventory management system and doing it in ConnectBooks, which is way more superior than QuickBooks' inventory management system. But the first thing was that we are very much focused on clarity. So, for example, if a client would come to me and say, "Hey, my cost of goods sold from last year, you're showing $1 million, I think it's 900." I'm like, "Well, look, I have it itemized per SKU. Let's go over. Let's see where the challenge is. By the way, I have a couple of bills to show you that this is what you paid for it. It's not what you meant. It's not what you decided. It's not like, oh, I forgot to tell you. We have backup of everything. We can literally take every single transaction and trace it back to the dollar, and show you that it's accurate. With A2X, you lack that visibility because the way the cost of goods sold is just manual inputs, and it's and and also if you tell a client, like, can you give me all your cost of goods sold from the last year? It's literally, I haven't seen anybody give it to me. It's literally impossible to pull a bunch of spreadsheets. So that's really how we differ, and we differ. So like people who appreciate that extra level of detail, people who want to like pay attention and get very granular, that's really where we shine, and that's really where we differ, and that's has been our approach all along. So our first step on ConnectBooks was evolved was getting itemized integration to QuickBooks, so we have accurate cost of goods sold. The second step was getting profitability reports on ConnectBooks.com, where we can see the cost of goods sold per item. And what we did even more was that we would pull the cost of goods sold from QuickBooks. So like once you would connect the SKU on Amazon to QuickBooks, we would pull back the cost. We built a lot of functionality, but afterwards, we needed an inventory age, which was the next very important aspect. So we developed a full, robust system and stuff like that. So we were always focused on getting, down to the last penny, being 100% accurate, not guessing around. Because for me, I know I find it scary when I guess and I tell a client, like, I think you lost money last year, but I'm not sure.
Right.
Like, the worst thing, but I had a client tell me once, you told them, oh, we made some mistake. Like, okay, so how many more mistakes did you make? Like, you want to come across confident. You want to come across saying, look, these are the facts. This is what happened. And if you have any questions, I got backup in every single thing.
Yeah. Well, that's good. One last question for you is this one. What steps are you taking to ensure the data security and compliance? Because there's so much going on. And I actually had a conversation with a guy this morning around just all the security with AI, because we don't have enough in yet because it's growing so quickly, and just learning how it's coded and how do you protect people's data from getting mixed up with somebody else's.
Yeah, so number one, we take security very, very seriously. We have a lot of measures put in place. Like, for example, like let's say if you work for ConnectBooks, they can only log in from the office. Like nobody can log in from the house or something like that. Like there's a lot of security measures put in place, which by the way, those security measures are not required by Amazon or Shopify or QuickBooks. Besides that, we get audited once a year by QuickBooks and Amazon, Shopify, and Xero. They all audit us. QuickBooks loves to do something called a penetration testing, where we set up a separate server for them, and they try to like hack our website for like a week straight, and then when they finish, they'll send us the results, and we have to, if they find something, we have to fix something. But usually I think the most they found was like some sort of maybe like low risk that we fix within a day, but there's never been there's never been an issue on our side. We take it very seriously. We spend a lot of time, money, and effort to make sure everything is properly set up and secured. And we have a lot of extra safety precautions, like I mentioned before, like employees can only log in to ConnectBooks while they're here. It goes even further. Like we recently developed a new feature where, like, if you want support to help you out, you have to like authorize them to get into the account. And there's a lot of stuff. There's even certain things that I can't do, which are locked down. Like, for example, I don't have the ability to add on a user to anybody else's account, right? Like that's something that the user has to do. So we're like basically giving everything to the user, making sure nothing's happening on their side, meaning that it's fully secured and everything's done the right way. We have the proper security team in place that oversees it. But besides that, we get audited by QuickBooks, we get audited by Xero, we get audited by Amazon, and we have passed every single time, never had any issues, never had any problems, but we do take it very seriously.
Yeah. No, and you have to these days with everything that's going on and what.
I had once, like, we signed up for one of the tools we're using. They were the phishing, like, and scammers are becoming so sophisticated these days. I got an email one day that someone, it went like this: somebody logged in from Japan, like like when you get a notification, like you just got like a new login. So I got an email from a certain software we use, like a third party tool. It seems like and we use that tool to like send emails. And I got an email that somebody from Japan just logged into your account here. So, and I knew we have nobody in Japan. So I call my CTO. I'm like, who from Japan logged in? He's like, can you check where the email is coming from? I'm like, oh man, I almost got, and it like was like eye opening to me because it used to be like I would get fake invoices or I would get something like that would, seem real. These like, these are the ones that everybody falls for. Like in New York, there's a bunch of easy pass scams. Like the basics that you constantly are falling for. But this was like something out of the norm. They didn't ask me for anything. They didn't tell me like update your credit card or like your account has been suspended or something like that. They can't, and they actually copied everything from that company. It looked exactly like that company. The only thing that was different is the email address was not from that. When you look, when you looked into the details, meaning the email name was the same,
Mm-hmm.
but when you clicked into it, when you looked at like where the email came from, it wasn't from the same. And they had a link like click here to log in, and once you log in, they already have your password and
Yeah.
information. And that was like, and today we're like super cautious. We actually have software these days that like monitor our inboxes, so that like meaning Gmail, Google does a very good job at it, but we got more robust on top of it that actually like filters all these things. But with that, we also do like we also have like once we have a couple times a year where we have like we'll have training from our security team like would come down and train the employees. And I think today the most important part which I have seen is like those type of emails that I got, those are the most vicious ones because all the computers are locked. Like nobody could come tomorrow to the office and decide to install a new program without IT. IT has to scan it and pass it. So they have to reach out to IT. I mean, USBs is something from the past, but USBs are disabled on our computers because that's
Mm-hmm.
required by all the big software. So really not much someone could do today. The only thing that somebody could really do today is those phishing emails. Those are like the biggest serious threats what I see. And they are just you have to just be vigilant. That's the real key today, to be
Yeah.
very, very vigilant. There actually is one cool thing. There's also today a bunch of AI tools that will like scan your cloud for like abnormalities. Like that used to be something I know for like 5, 6 years ago, that was something very hard to do because the benefit of AI is that it learns. So you can tell it like if you see anything out of ordinary, alert me. Back in the days like 5, 6 years ago, when you wanted to install such a type of software on your server, you would have to tell it what abnormalities are. So you have to sit and like write a bunch of code saying, okay, so if X happens on a day-to-day basis, then alert me. If not, not. Today, you just plug it in. It takes a couple of days, it learns it, and if it finds something, it learns it. And they're pretty good.
Yeah.
Pretty good. So that's like a huge game changer.
Nice. One last thing for you we'll chat about is with your software. One question was how it's implemented. Is it customized? Is it a plug and play? Do you just go? You can just speak to their how it gets set up so people can connect to their channels.
Yeah, so with ConnectBooks is one of the things we focus very strong on is making sure that everybody understands how the platform works. So first thing is we have very good documentation, help docs. Our support, I think if you check on our website, we respond under 4 to 5 minutes. We make sure that everything is very clear. But the best thing is we give an onboarding call, especially for accountants and bookkeepers. So what we do is every time we get a new account come in, there's somebody from sales who reaches out just to make sure that the customer understands that um, the customer understands what features are available, what they need, and making sure they have the right plan and what's needed for them. And then what we do is we schedule an onboarding call with every single client. We actually lock the QuickBooks integration. So, for example, you sign up to ConnectBooks, you can right away connect to Amazon, all the stores, but we lock the QuickBooks integration until you schedule that call. Obviously, if somebody asks for it, we open it. But the main thing is what we have seen in the past is people who don't go through that onboarding call have a very hard time. Our onboarding calls are like 45 minutes to an hour. That's just for the accounting side, and it's a separate onboarding for the inventory. So usually what happens is, let's say if somebody's a bookkeeper, they'll use the first call they'll go through, they have a full-fledged onboarding, and they'll get to know the system inside out. And then usually by the second or third call, they'll just send in a request like, hey, I just signed up a client, please unlock it. We'll just do it ourselves. But we put a big emphasis on our onboarding, and I think it's key, to having proper streamline. Because if you and I always tell people like, when it comes to inventory-based businesses, the most important part is understanding the products. Because if you don't understand the products, you don't understand the flow, you don't understand what you're doing,
Mhm.
then basically a year later you find yourself in a big mess, and you're just not going to know. So we focus a lot on that. Um, I don't think anybody who ever reached out to ConnectBooks, said they have an issue with onboarding, they never got denied. And they
Yeah.
all have it. Sometimes there's a problem when somebody thinks they try to do everything and they like try, and meaning anybody can try. We let everybody, but we like to get that first hour call, and once they get that call, they usually have everything very straight down.
Mhm. Well, there's so many things too. If it's not set up properly, if somebody doesn't take the time, then the data is going to the wrong GL accounts. It's not coming
Yeah.
anywhere. And especially, like a good example I always give is with Shopify. You may have additional payment gateways with PayPal and Stripe in there, and so they need to go to a clearing account and then get matched over and various things like that that people forget, and they just have everything flow into income.
Well, what if they have two PayPal accounts?
Yeah, and they could.
That
Yeah.
gets more fun. They have two PayPal accounts. You have to have two clearing accounts. So that
Yep.
gets even more fun. But we're here for you. We're here for everything like that, and we walk you through every step along the way.
Yeah. No, I think that's something that's extremely beneficial that you guys have, and I think that it really helps people make sure that they're set up correctly, the data's flowing in, and to your point, you're understanding where your numbers come from.
Yep.
Cool. Well, thank you so much for your time today. Anybody else that had questions, keep them coming. We'll go back and fill those out. And then feel free to connect Nachman on LinkedIn and check out his website, ConnectBooks. And if you are an e-commerce, I highly recommend your software to be able to help and get people what they need.
All right. Thank you so much. Really been a pleasure being here. I enjoyed the time.
Awesome. Have a great rest of your day.
You too. Bye
Thanks.
bye.
Bye.